afternoon, ladies and gentlemen. Good afternoon. The results for Scotia Insurance and its financial performance for the second quarter in terms of total revenue. Revenues for the second quarter were marginally down over the first quarter by $54 million, or 4%. And this is in spite of a reduction in our net interest income of approximately $140 million. The impact of the reduction in interest rates were offset by increases in terms of our actuarial reserve releases as well as our credit insurance premiums. In terms of our insurance revenues, this is a new slide which we have included, and it shows the composition of our insurance revenues comparing year-to-date April 2011 versus year-to-date April 2010. And there has been a reduction moving from 3.0 billion year-to-date April 2010 to 2.766 billion in year-to-date April 2011. The primary reasons for the reduction relate to, of course, reduction in interest rates. Net interest income fell by $226 million, and we also had reductions in our reserve releases of $251 million. However, both of these were offset by increases in our premium income, which went up by $179 million, and this is due to very good performance from our credit insurance line as well as our critical illness line. In terms of our next slide, total operating expenses, this was $382 million year-to-date, and quarter-over-quarter there was a reduction of $6 million as we continue to aggressively manage our expenses in spite of the aforementioned increases in salaries and other inflationary pressures. In terms of our net profit for the 6 months ending April 30, we made a net profit of a little over $2 billion. Quarter-over-quarter, our net profit reduced by $125 million, primarily because of reductions in our net interest income, which fell significantly because of the reduction in interest rates in the marketplace. In terms of our productivity ratio, and we define productivity ratio as total expenses over total revenue. We continue to maintain a productivity ratio of 14%. This is the best in the life insurance industry, and we are very proud of our efficient operations, particularly in terms of our back office. In terms of the total assets, these increased quarter-over-quarter by $3.6 billion, or 6.7%, and this was primarily due to increases in our investment portfolio. We have come to the next slide, the last slide, which is market share, and we have left the best last. As this slide demonstrates, in terms of market share for gross premium income, Scotia is now number 2 behind Sagicor, and we have relegated Guided Life to number 3, albeit marginally. But we are very proud of that achievement, and we are proud of that achievement because Scotia has a field force of 61 agents. Guardian has a field force of 234, and Sagicor has a field force of 425. Thank you very much.